Hello guys, welcome to the Trading Parrot. As you can see, the scenario of the slowdown, which is the one that we were mentioning on Saturday and Sunday, is the one that is currently playing out. I had a bearish bias, and in this video we're gonna talk about the levels that we need to defend. I'll give you an update on all the patterns. Some of them are having a tough time at the moment, and make sure you watch my analysis of gold. I want to make sure that you have more realistic expectations on how that played out in the previous cycle and how that affected Bitcoin initially. And of course, we're keeping a very close eye on what's going on with the liquidity, what's attracting the price at the moment. And if you stick until the very end of the video, I'll tell you who the hell is currently selling Bitcoin. And it's incredible how they are doing this on Binance. Keep an eye and watch out for them, because this seems to be a very manipulative action. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And guys, I have to say million thanks, because over the weekend we broke all records. We went from roughly getting 100, 150 likes every day. Over the weekend we got 300, 400, and then I get 300, which is incredible. I really appreciate if you can continue hitting the like down below if you think that this content is worth watching by more people. Let's get to it. If you've been watching my videos on the weekend, I published this one, why the upcoming correction won't matter, number one, and the second one, asking the question, quantic jump versus slowdown. And if you watch the full video until the end, you're already aware that I was biased towards looking up for a new low on Bitcoin. Early this morning at 7 AM, I published an update on my Telegram channel, Instagram, and on Twitter with a short 3-minute video showing you that precisely what we talk about this weekend on Monday is currently playing out. So now we're gonna dig more into detail in that and see potential levels of support, reversal. Things could get a little bit more scary, particularly for traders that just entered the market. On Saturday and Sunday, we've been talking about the CME gap. We mentioned that we closed at 66.2K, and if over the weekend the price was to come down, we can use that as an insurance, because price needs to come back to 66.2. But here you go, these red areas in here are each of the weekends, and you can tell how tricky these bastards are, because they pretty much open at the same price on Monday that they close on Friday, just so there is no gap that can hold the price. As soon as the market opened, the price started making a move, starting from roughly 66.2, which was the closing price, and on CME still holding 64K. Remember that CME has a different price of Bitcoin, slightly more expensive compared to what we can find on Binance on spot, for example. Looking now at the 4-hour, I'm gonna mention a few things that I don't like, but always when you hear these things, particularly if you're new to the channel and if you haven't watched my videos on the weekend, you might get confused. So heads up, because I'm actually bullish for October, at least with what I've seen so far. So here is the 4-hour channel, and is in the process right now of breaking down on the price. Of course, the RSI broke down way before, when it was at this support at 64.2. We already have a big ugly candle below it. The price 8 hours after only is breaking down and now testing this bullish order block and getting close to 63K, which is also something that we mentioned Saturday and Sunday. I said many times that I don't think that we are gonna hold this level. I show you the RSI on the 4-hour. We also look at it on the daily time frame. We held it for 2 days. On the daily now we are below 64.7, which I mentioned was a very strong level of resistance. Shorts do not count victory yet, because the daily might close back above 64.7, which could turn this whole ugly candle into a very bullish one. If you leave just a week to the downside in here, then we are ready to smash the top. But let's not get ahead of ourselves. Let's look to the downside. What do we have holding the price? If you look at this whole volume profile in here, the largest candle of trading volume, which is the point of control, the red line in here, has held the price for 7 days in a row. So I will start to get a bit concerned if we started to break below the point of control, because that takes us back in the range that belongs to the bears. We are talking about the point of control of the past 6 months. So it is relevant to look at the price of 63K. 63K. We are allowed during the day to stick our head below the point of control, okay? We can grab liquidity from there, from the shorts, but then we have to go back above 63K, in my opinion, if we want to be able to still retain being the most bullish September in history for Bitcoin. We're roughly 9% up for the month, and the best September ever for Bitcoin has been 6%. But once again, as I said yesterday, I really don't care to see Bitcoin putting a low right now. And that is because I still see the big whales withdrawing more than depositing. We have a contrarian attitude from what we have seen in these past 4 distributions. I do not see long-term holders selling in here. And if you observe the chart of the open interest, you can see that we can do 3 things. We can hold on the top third for a little bit longer, bouncing on the support. We can come back to the second third and then make it back to the top third, hitting once again a high, or from the very top, we can make a whole journey back into the low of the range of the open interest, located roughly at around 16 billion. That will be devastating. We do not want to see that, of course. We have already had that played once, 2, 3 times. So if that happened, I will look certainly into adding to my position sub 50s if we get that opportunity. But I remind you, I think in order to get to those levels, once again, we're gonna need quite a big bearish narrative. And so far, I haven't seen it yet. Looking at some of the patterns that we saw breaking out, unfortunately for today, we are seeing this pattern invalidating. It's not confirmed invalidation, but we are below the neck. That's not a good thing. The neck is at 64.7. So hopefully by the end of the day, we can go back above it. An invalidation like this can be undone. It's just that by seeing this, the probabilities of still continuing straight up are reduced. And the inverse head and shoulders, it's looking like it's finding still support here at this area on the 8-hour time frame. For this particular breakout, nothing broken yet. And the megaphone pattern is looking nice as long as we don't go back below the bull market support band. That is roughly around 61K. What we need to do is the opposite of this candle. Of course, that's no surprise. Getting above it and not holding means that we still have a lot of work to do. I want to remind you that both long-term holders and big whales, when they have conviction, they continue with their plan. For example, in this price action in here that starts from June and ends around March, they are continuously accumulating, and within that accumulation area you can see 16% drawdowns, for example here in August into September, and they even accumulate more, getting to a ratio of 0.45. I understand that many people, if you saw right now a drawdown of 16%, most people are just literally gonna enter panic mode and say, okay, this is the end. But if we continue to see them withdrawing and we continue seeing long-term holders accumulating with conviction and you are distributing, you're probably gonna be in the wrong side of the game. So far, this is still looking like a retest. We are at 63.7. And the first MA comes in at 62.9, the second one at 61.5. We're seeing a bearish cross on the MACD, still not playing out, but it's getting close to happen. We have very low volume, so we have a chance that this can be undone. Just another aggressive move to the upside could open up the MACD once again and continue going higher. But I'll keep you updated with this pattern as well. And regardless of what people are saying that October, November, December must be bullish, remember that every time I talk about that, I refer to it as past performance, as a guidance, but I do not trade seasonality of Bitcoin. I look at the charts, and if they are in confluence with seasonality, then I make my move. But I want you to notice something. We are looking for a top on gold. Top on gold, like in here in 2020, was one of the biggest responsible factors for liquid injection that went back into Bitcoin. And if you don't believe me, we went from 9K to 65K right after topping on gold. But it's very important that we read between lines as well. We zoom in and we look at what happened when gold topped out on the 10th of August. At that point, Bitcoin went sideways and then it put a drawdown of roughly 15%. The difference is that gold continued going down and Bitcoin found a bottom at roughly 9K and then it started the rally. So based on that past performance, if we were to top out somewhere early October, we might see within October Bitcoin producing some drawdown as well. And I know many of you guys are still looking for an entry, and I will say if that is not caused by a black swan event and it was just because gold happened to top out at the same time that the dollar index is start to break down, then that will be extremely bullish for Bitcoin, particularly if we only see a 10%, a 15% down within the month of October. I copied the candles from this rally of gold into 2020 in here, and it's pointing out to early October. It could be a few weeks after or a few days earlier. We're talking about a top of gold of 2700 to 2800, and we were about to touch in the past few days. So let's keep a very close eye on what happens to gold, because once gold starts breaking down, the first reaction of Bitcoin to that is to get dragged down as well, causing panic in investors. But actually, people exiting from gold brings liquidity into Bitcoin too, and that is worth thinking about as well. We have confirmed the 3 white soldiers. There is some wick in here, and the last candle is not as big as the first, but we did break the structure on the weekly. We put a new high in here, so the structure should be called now a bullish one instead of what we've been doing across all this range in here. So that's good news. As I'm recording the video, I see that the price is coming now and potentially getting close to the order block at 63K. Very impressive. One of the things that I didn't like around this area is that we never managed to touch the CPR monthly level. If you've been watching my channel for a while, we monitor the CPR levels, which are these green and red lines, and the most important ones that are the white ones called the pivots. A bullish month consists in a month where most of the price action occurs above the pivots, and to maintain that bullishness with every month, what we are looking is for the price at least once to touch the resistance. In this case, we were dollars away from touching the resistance, but we didn't. Similarly to what happened in July, that we couldn't touch it, and after that the price went back to the pivots and then back to the first line of support. It's a bit disappointing that we couldn't touch it. I was speculating for the full month that we might be able to get to 67K just because there was so much liquidity, and as you can see, we have some left over here that could have made the price touch that CPR level. But right now the shorts are opening positions heavily. To be honest, they don't have very heavy liquidity pools to target to the downside. This liquidity pool here is nothing compared to what we just left right next to the price, and the only significant one is at 57.3, but in order to get to the large ones, you have to make a whole move to 48K. On CoinGlass, you can see the liquidity that we are currently targeting, starting with 64, next is 62.5. We talk about these fair value gaps over the weekend. We say that they were going to get scary and that there is a high likelihood that we were going to look for a low, and since we have all these fair value gaps in here, why not doing it now? On the order book, we can see 40 million right above the price. That is the selling pressure immediately that we have. But right at support, we have 38 million, and below it, there is 20 million. We have a sandwich of 38 on the downside and 40 on the upside. So far, this is looking like they might be able to push it slightly lower. We can see all the fight in here, and they're heavily selling on Binance. I ignore why they started the week so aggressively. You can see the stack of selling, multiple levels of around 600. We were expecting something like this, but it's incredible to see it then playing out. Shorts are taking the lead. There's so many shorts at the moment, and the open interest is spiking because they have managed to enter the orders, liquidating lots of longs, as you can see with these green bubbles. And we were wondering who the hell are selling, and you can see that we have a red line in here indicating that the top traders are currently in a quite large leverage positions. So contrarian to what I was thinking, these are actually the top traders at the moment that are shorting the price. During the day, I will have to pay a little bit more attention to more signals and to see what's really going on. And by the way, the Bitcoin dominance has been 3 weeks in a row to the downside. That's quite interesting to see for two two reasons. Number one, the implications towards the altcoin season. Breaking below this could take us into an altcoin season. But at the same time, I was hoping that while we are seeing Bitcoin pumping to the upside, to also see the dominance to increase together with it, because that is something very bullish. When you break the top of the range, I will expect the dominance also to make a big spike to the upside. But we are seeing the opposite. Guys, if you scroll down in my video description, you're gonna find the best products that I like to use every day for my trading. Whether you are interested in trading bots or on different exchanges, you are definitely gonna find here the best discounts. I recommend that you have a look at Free Commas. If you're interested in the liquidation pools, have a look at Trading Different. My personal favorite hardware wallet is Tangent. You can get 10% discount and then carry just a card. If you were considering opening an account on any of these services, it really supports the channel, and at the same time you can get a great discount. Don't forget as well that if you open a Bybit account with my referral in here, you can get access to all my indicators, become a VIP member as well on my Discord server. See you there. Bye bye.